global news, and what will really be in the spotlight this week will be the FOMC meet. So today is the start of that most crucial meet, and in a rare occasion, it is unclear whether the Fed will raise rates or pause. In fact, there was a fifth of a chance, 0.2% chance, that the Fed would actually raise by 50 bips, which has now gone away. There's a 0% chance of that anymore. Most economists not projecting that or taking that absolutely off the table. And Fed's meeting this week is different because it follows the sudden collapse of confidence in the US banking system following the government takeover of SVB, as well as the fall of the Swiss banking giant Credit Suisse. And one of the main cues will be the Federal Reserve's meet and its outcome, which we will know late tomorrow evening. It will be crucial as the meet comes on the back of the banking crisis and could prove to be an inflection point. Going by the commentary we've heard from the chairman, Jerome Powell, it would be unlikely to see a pause. We can expect a 25 basis point rate hike instead of a 50 basis point rate hike, which I did mention. My colleague Lisa is here with all of those details.
Well, the Fed FOMC meet is expected tomorrow and it will go on till Wednesday, where the outcome of the rate hike decision is likely. Well, this is the first meeting since the SVB and Signature Bank crisis, and also the first meeting since the Credit Suisse as well as the UBS deal. Well, the question that arises is whether the rate hikes have reached the crucial inflection point. Just last week, the European Central Bank, they stuck by its inflation fighting spirit by hiking its key interest rate hike by 35 bips points. Well, this time for the FOMC meet, the consensus is not very clear because there is uncertainty regarding this time's FOMC policy on account of the banking issues. Just 2 weeks ago, the debate was around whether the rate hike would be between 25 bips to 50 bips at the March meeting. However, expectations are now rife that there will be a 25 bips rate hike, or there might be even a pause at the meeting. So the key commentary to watch out would be whether Fed would prioritize its fight against inflation or whether it would focus on maintaining the financial system, whether there would be a contingent impact on any other banks, and most importantly, whether this would mark a pause in the rate hikes.
Right, and all eyes on the Fed today. And moving on now, we will be sticking to the global banking crisis. And the lawyers from Switzerland, the United States and the UK are talking to a number of Credit Suisse additional Tier 1 bondholders about the possible legal action after the state-backed rescue of Credit Suisse by UBS wiped out AT1 bonds. Swiss regulators announced that the AT1s, widely regarded as the relatively risky investments, will be written down to zero, while stock investors will receive payouts as a part of the takeover, which angered the bondholders.
Well, and quickly moving back to the US, Treasury Secretary Janet Yellen said that while authorities believe they've taken sufficient action to stem liquidity problems in the banking sector, the government is prepared to guarantee even more deposits if the banking crisis gets worse. She said, and I quote, "The steps we took were not focused on aiding specific banks or classes of banks. Our intervention was necessary to protect the broader US banking system, and similar actions would be warranted if smaller institutions suffer deposit runs that pose the risk of contagion."
And during a surprise visit to Kiev, Japanese Prime Minister Fumio Kishida offered strong support to Ukraine and invited President Zelensky to participate in the Group of 7 summit in May. Remember, this visit comes while China's Xi Jinping was in Moscow in a bid to strengthen ties with Russia.
Well, and Nike's holiday quarter earnings and revenue beat Wall Street estimates, although its bloated inventory continues to weigh on its margins and sales in China fell short of expectations. Nike, just like other retailers, has been in the process of offloading a glut of inventory brought on by supply chain disruptions and shifting consumer demands that's been weighing on its margins. Meanwhile, Nike CEO John Donahoe, apologies for that, had already warned investors of gross margin hit during the holiday quarter.
And And Chinese-owned short video app TikTok faces a pivotal moment as the app faces growing pressure in Washington and calls to ban the app by many in Congress who fear its US user data could fall into the hands of China's government. Remember, in 2021, the app globally had more than 1 billion monthly subscribers.
Well, and in global news otherwise, at least 2 people were killed and hundreds injured in Pakistan after a magnitude of 6.5 earthquake hit Pakistan and Afghanistan, with tremors felt in India till New Delhi. The earthquake's epicenter was 40 kilometers southeast of the Afghan town of Jurm, near the borders with Pakistan and Tajikistan. Welcome back. You're watching Market Cafe on ET Now, and moving on, crude oil prices have been on a slippery slope for some time now, and the brewing banking crisis has raised concerns about the health of the global economy, especially in terms of crude demand. Brent crude has slipped below the $75 a barrel, but seems like it is unlikely for that to reflect on prices of fuel at your nearest pump. ET Now's Aishwarya Patil went down to a petrol pump earlier in Mumbai to get a sense of how expensive fuel still is and if customers are expecting any respite anytime soon.
Well, last year in June, we saw that the crude oil prices were hovering at about $120 per barrel mark. And in recent weeks, we've seen a sharp decline in the crude oil prices. The prices of crude have come down to almost $70 per barrel mark. What has triggered this decline? Well, one of them being the global economic slowdown that we're seeing. Also, the banking crisis, SVB fallout, and a few other US and European banks have also been under pressure that we've seen in the last couple of weeks. Well, this slowdown is good news, of course, but in the domestic market, whether this will be passed on to consumers, it seems like it might be highly unlikely. Why do we say that? Well, IOC, HPCL, BPCL, these companies have seen a net loss in the last couple of quarters. In fact, the three put together saw a net loss of 21,000 crore plus in the last couple of quarters, and oil companies still are yet to recover 18,000 crore of losses that they've made over the last few months. So on back of this, the chances are bleak that we will see any relief in the prices of diesel and petrol in the coming months. Back to you.
Whatever we will say, they will not do anything. They will not do anything. They will just increase the amount again if we say anything. I know that very well. I think so they will say like, we'll do 6 rupees less. But I think so they will again take them up to 10 or 12. So there is no use to say that.
Keeping oil price artificially low, you've seen the situation in Sri Lanka. So if it is taxpayers' money through deposit financing, if we are keeping petrol price low, our future generation or next generation may have to pay the cost of it. So it is better to make it market driven rather than government subsidizing it.
And all right, just a week back, El Nino and the likelihood of a searing summer was the talk of the town. And just a week later, unseasonal rains and hailstorms have dominated the news headlines. Here's an explainer on just what is going on in the world and how climate change is taking its toll on the planet.
Did you wake up to rains and hailstorm this morning? And did you meet serpentine queues of vehicles on your way to work? Well, chances are that many of you did. Over 10 states across India have seen light to moderate rain, and some have even seen hailstorms. And if the Met Department is to be believed, several parts of India will continue to witness rain accompanied by thunderstorms and even hailstorms, and this could happen over the next couple of days. The unseasonal rains have badly impacted standing crops in several states in India. Crops like wheat, mustard, cumin, among others, they've been destroyed across several states. So much so that the Met Department has advised farmers to postpone harvesting. Isn't it really surprising that just a week back we were discussing the prospects of an El Nino and a simmering summer? And now we're in the middle of unseasonal rains and hailstorms. So what exactly is happening? Well, the United Nations Climate Change Report has some clues. A report released by the UN's Intergovernmental Panel on Climate Change, IPCC like it's called, has warned that the world will surpass the critical threshold of 1.5 degrees Celsius by early 2030s. Scientists are warning that once the 1.5 degrees Celsius level is breached, climate disasters will become so extreme that people will not be able to adapt to the weather changes. And the report goes on to warn that famines, heat waves, and infectious diseases could claim millions of lives by the end of the century. So dire is the crisis that the United Nations Secretary General Antonio Guterres has called the IPCC report a how-to guide to defuse the climate time bomb. Further, the United Nations chief has demanded developed countries like the United States to eliminate carbon emissions a decade earlier than planned. And emerging economies like India, as well as China, have also been asked to hasten their efforts to cut down carbon emissions. And despite all the hype at climate change conferences, this is the unfortunate reality that most countries are far, far away from meeting their climate commitments. Forget limiting global average temperatures at 1.5 degrees Celsius. The IPCC's synthesis report has warned that the Earth may warm by a shocking 3.2 degrees Celsius by the end of the century. And this would translate to unprecedented rise in sea levels, the extinction of hundreds of species, and large-scale migration. So what is crystal clear is that the world is sitting on a ticking time bomb. And every second that policymakers choose to look the other way, every delay, every inaction will come at the cost of life on Earth. Remember, there is no second Earth.
Well, climate change definitely hitting us harder than what most of us were expecting. But quickly moving on, the Agri Minister says that the state may compensate damages if needed, and the centre will intervene if states ask. Listen in to this piece from him.
स्वाभाविक रूप से कृषि के समक्ष हमेशा चुनौतियां बनी रहती हैं। बेमौसम बरसात अभी हुई है, उससे भी निश्चित रूप से फसलों को नुकसान पहुंचा है। भारत सरकार राज्य सरकारों के संपर्क में है, राज्य सरकारें उसका सर्वेक्षण करा रही हैं और राज्य सरकार को नुकसान की भरपाई करना है तो राज्य सरकार करेंगी। आवश्यकता लगेगी तो केंद्र को मेमोरेंडम भेजेगी। तो केंद्र हमेशा राज्यों के संपर्क में राज्यों के साथ हमेशा किसानों की मदद के लिए खड़ा हुआ है।
And Tata Motors has announced a 5% hike in its commercial vehicle prices, which will come into effect from the 1st of April this year. Now, that is less than 2 weeks from now, of course, and this is on the back of the BS6 Phase 2 norms that are coming into play. So what does these norms really mean and how can it impact the auto sector going forward? My colleague Sumita Karir breaks the same for us. Let's take a look.
Well, Tata Motors has just announced a price hike of 5% for all its commercial vehicles. We also reached out to Tata Motors to ascertain whether this price increase will be implemented for passenger vehicles as well. Well, they have said that as of now, this is not expected. But according to experts, price hikes are expected all across the auto segment. Now, why has Tata Motors increased the prices by 5% or has announced to increase the prices by 5%? Well, that's because of BS6 Phase 2 emission norms, which are to be implemented by April 1. So April 1 is the deadline, and this is when these norms will be implemented. Remember, BS6 Phase 1 norms were implemented in April 2020. These are to ensure vehicles are less polluting. So what really makes these vehicles more expensive as far as these norms are concerned? Well, these norms actually require a couple of things. First of all, they require a self-diagnostic device to be installed. Engines have to be replaced. Now, if this self-diagnostic device is installed, it basically helps the driver monitor parameters, and if the driver or the car owner basically breaches those parameters, then this self-diagnostic device actually shows a warning light if these norms are violated. Now, poor air quality, as you know, has been center stage as far as the auto industry is concerned. That has been repeatedly discussed as far as policy discussions are concerned. Now, as far as these norms are concerned, phase 2 emission norms are stricter, more stringent than phase 1 norms, because these will be tested in real world driving conditions and not just in labs. In fact, just very recently, Tata Motors, Suzuki, Maruti Suzuki and Mahindra received compliance status as far as these norms are concerned. And Mr. Shailesh Chandra, who's the MD of Tata Motors, then said that our portfolio has already transitioned to BS6 phase 2 emissions norms in February 2023 ahead of the regulation timelines. We've also enhanced the products with improved performance, added new technology features and increased warranty of our vehicles. So Tata Motors, of course, is transitioning its entire portfolio in accordance with these norms. And going forward, what you can expect? Well, price hikes across commercial and, of course, passenger vehicle segments. Price hikes of how much? Well, 10,000 to 50,000 is what experts predict. In fact, according to a report, 2023 Hyundai Creta and Hyundai Venue demand a premium of up to 45,000 and rupees 50,000.
Well, right. Interesting to see the interplay of that along with the EVs as well, because that will add, I'm guessing, some amount of demand to the EV segment. But quickly moving on, JK Tyre launched a premium tyre brand, Levita, which is an ultra high performance tyre meant for super luxury cars. Although volume growth remains small for the segment, Chairman and Managing Director Radhupati Singhania is optimistic about the new launch. Speaking with ET Now, he shared his outlook for the tyre industry as a whole in India and the scope for growth. Here's an excerpt.
Supplying tyres in the scooters, at least 8 or 10 brands of EV manufacturing two-wheelers are using our products. And so are our products ready in the car market. But the car market is picking up rather slowly in the EV application. Okay. So we are very much there, and our agenda is to keep up with the demand. We are also investing in technology in terms of developing specialized products with high torque and so on. And as far as the SUV is concerned, that is constituting a huge market now of the car industry per se. Nearly 38+%, anywhere between 38 to 50% production or sales is now taking place in SUVs. So we are there in most of the ranges, and some ranges, which higher sizes, which we are not present at the moment, are going to be catered to with our new technology product lines which we are going to introduce.
Right. And what is your growth outlook for the industry and, of course, for JK Tyres for the coming year? And if you could give us some sense of the guidance, if I may ask.
The industry is expected to grow in a healthy pace of nearly 10+%. And we are also expected to grow at about 10-12%. This is what we are foreseeing in our future next year. Right. And I think as a country, we are in for a good time in terms of economic activity. And economic activity leads to mobility, and mobility leads to tire demand. Right. Whether it is passenger use yours or my cars, or it is the freight to be carried by the trucks and buses by people carrying. So in fact, we see a good future by and large for the tire industry. And when I said by and large, the by part comes from the 2-3-wheelers. The 2-3-wheelers is expected to grow a little bit slower.
And while the government has said no to the parliamentary panel's advice to cap airfares, Civil Aviation Secretary Rajiv Bansal said that the government must not interfere in the free market economy amid concerns over possible predatory pricing of air tickets. My colleague Tamanna Inamdar is here to tell us more on this.
It's an important statement coming in from Civil Aviation Secretary Rajiv Bansal, who's saying that the government is not in favor of interfering in a free market by imposing price caps. He does although say that the government has conveyed to airlines that they should not indulge in predatory pricing or have any inconvenience for passengers in the highest end of the bucket. Now, the context to this is a demand made by a parliamentary panel last week from the ministry that put out a report claiming that predatory pricing was being practiced in the Indian civil aviation market. They in fact went as far as to recommend that there be some kind of a system or a mechanism in place to ensure that passengers are not fleeced in the name of an open market. They have recommended minimum and maximum price caps, somewhat like what was happening during the COVID-19 pandemic. Now, this is because of a number of complaints coming in of predatory pricing, especially at the highest end of the bucket. There are 16 price buckets when it comes to airline. The lowest of those price buckets is supposed to be equal to, say, a first class AC ticket in a train, but the highest of the price buckets have become fairly exorbitant in recent times, especially when there's high demand, like the recent Holy weekend. This has led to a number of complaints, and hence this parliamentary panel did recommend that there be price caps in place. The government making it clear right now that they have no intention of going ahead with price caps, and that is good news for the airline industry, but the question remains, what happens to the consumers?
What government is saying that they don't want to intervene in all of it is fine, and they should be right. After a point, they can't be taking all the calls and all the shots. We all need to come together and figure out something that works all for us. As you're right, and another situation I face is that there is no checks and balance that way. If you don't have a rule or a discipline to define the cap or anything else, I'm apart from a free market, I'm creating a situation which is disastrous, catastrophic for the entire industry.
You have 100 aircraft in India which are standing at various airports without engines. New aircraft can't come fast enough. There are huge orders, but where's the supply? It's not coming quick enough. So at the end of the day, there is a certain minimum that the airline needs to price the ticket at to be able to break even on a flight.
Where the government can help, and as I pointed out, it has tried in some of these areas to help the airlines, is to help work both on facilitating an increase in supply, the capacity, as well as in reducing costs. And it's only when, and in the short term, the thing that can kick in quicker would be, things like taxation and so on, which can have an almost immediate impact.
Right, with that we'll slip into a very short break, more on the other side, so stay tuned. We'll go domestic and we'll go company specific as well.
Welcome back. You're watching Market Cafe. Now, outgoing Chief Executive Officer Rajiv Gopinathan may stay on in Tata Consultancy Services in an advisory role. People familiar with the matters say there are discussions, of course, within the group to involve Gopinathan in a strategic advisory role within TCS or within the other Tata Group companies. Now, we spoke with Romita Mazumdar of ET on this, and here's what she had to say.
Now, we hear that Rajesh Gopinathan is being considered for roles within the Tata Group or within the TCS board itself. And to some extent, it also makes sense because the Tata Group has been using TCS as a talent factory for years. I had written about this last year as well. And secondly, for the digital and tech-facing businesses of the group, they have been looking for more top-level talent. They have already hired a lot of people from within TCS with domain expertise over the past few years. And it makes sense that they might also look at someone who can bring in some macro level perspective for the larger digital business. And Gopinathan, being the core numbers and strategy person that he is a good fit for the role. However, as we understand, this is still at a very preliminary stage of discussion. Gopinathan has told us in a recent interview as well that he has not decided what he wants to do next. He doesn't have any specific plan. He did, however, mention that an advisory role, while it wasn't something on the top of his mind earlier, it is something that he kind of has a respect for, but he might look at.
Right. We'll quickly move on. Hindustan Zinc is in focus. They've announced a fourth interim dividend of 26 rupees per share for the current financial year. Hindustan Zinc has paid dividend thrice during the fiscal, resulting in a total payout of over 20,000 crore rupees to shareholders. We have Ashesha with us in the studio, who's going to give us perspective on this front. Ashesha.
Absolutely. So this is the fourth interim dividend coming in from Hindustan Zinc to the tune of 26 rupees per share, which at the current market price translates to a dividend yield of about 8.5%. Remember, Hindustan Zinc has declared a total dividend of 75.5 rupees for financial year 22-23, which translates to a dividend yield of a whopping 24%. Remember, Vedanta holds about 64.9% stake in Hindustan Zinc, and as a result of its stake in Hindustan Zinc, it will get about 7,125 crore rupees. Vedanta Resources in turn holds about 69.7% stake in Vedanta, which means that if Vedanta goes ahead and declares dividend, it will get about 4,970 crore rupees, excluding any tax implications, if any. And higher dividend from Vedanta will help Vedanta's parent company, Vedanta Resources, to repay its debt obligations, which has been a major concern over the last couple of months. As far as Hindustan Zinc's debt cash position is concerned, remember at the end of third quarter, it had a cash position of about 16,500 crores, and in January it declared third interim dividend to the tune of 13 rupees per share, which entailed an outflow of about 5,500 crores. Now, it has declared a dividend of 26 rupees per share, which entails a total outflow of about 11,000 crores, which means Hindustan Zinc is not left with substantial amount of cash as of now after declaring these two dividends in one quarter itself. Investec, meanwhile, has come out with a note on this particular declaration of dividend. On Vedanta, they've downgraded the stock to sell rating from hold rating. They've cut the target price to 220 rupees per share from the earlier target of 290 rupees per share. For Hindustan Zinc as well, they are maintaining their sell rating on the stock. They've cut their target price to 270 from the earlier target of 280 rupees per share. They say Hindustan Zinc's bumper payout could be its last, as its vaults are now dry. Incremental payout depend on earnings, that is on commodity upcycle, and hence for now they are maintaining the sell rating on both these counters.
All right, thank you for the details, Ashesha. Now we have Winnie joining us, who has all the brokerage notes that came in this morning. Winnie, tell us, what are the brokerages saying and what are the stocks that we need to watch out for?
So on the brokerages fund, first let's start with Pidilite, because JP Morgan has come out with a note where they're maintaining an underweight rating on the stock given a target price of 2,150 rupees per share. Now what they're saying is augmenting efforts will actually be something that will drive up the growth for the company, but margin recovery well reflected already in the earnings as well as valuations, and trends are steadying out as well. Rural segment is something that is yet left to fully recover as well. So the recovery in rural segment will be a key factor that everyone is keeping an eye out on. Keep an eye out on Pidilite, because valuations as of now are a bit expensive, is the word coming in from JP Morgan. Bharti Airtel 2 in focus, as Morgan Stanley is maintaining an overweight rating, target price of 860 rupees per share. They believe that the new postpaid family pack will keep the stock in focus. They believe plans are not more competitive than in terms of Jio's new plans as well, and the plan will be accretive in terms of the ARPUs existing existing family packs, whether we are seeing over there as well. So keep an eye out on Bharti Airtel. And lastly, we have the gold finance and Manappuram Finance that is going to be in focus, as BofA is maintaining a buy rating given a target price of 140 rupees per share. They believe that the focus for the company is going to be mainly on the portfolio diversification, and the company is seeing a strong growth in terms of their outlook for the non-gold business as well. FY24 target is 20% of the consolidated growth, as well as the target is to be supported by the non-gold segment as well. So on the back of that, they're maintaining a buy rating on Manappuram Finance.
Well, thanks for all of those details, Vinny. We'll keep an eye out on all of those stocks, but let's quickly move on to Ashesha again. She's right here with us. And Ashesha, talk to us about all the stocks that you're keeping on your radar. Of course, several stocks in the news on the back of or post-market close yesterday.
Absolutely. So HG Infra will be the first one in focus, and that is because the company has been declared L1 bidder for redevelopment of Kanpur Central Railway project, and the cost of this project stands at about 655 crore rupees. So on the back of this particular counter will be in focus in today's trading session. Apart from this, Harsha Engineers will be in focus, and that is because lock-in period ends today. About 54.9% stake was locked in, promoter stake, and now this will be open for the promoters to sell in the open market. So on account of that, Harsha Engineers will also be in focus in today's trading session. Moving on to to Ashiana Housing then, they've given some operational update. In the month of March, they've crossed annual booking value guidance of about 1100 crores for the year 22-23. The total booking value for the year 22-23 up until 20th of March stands at 1278 crore rupees, and the total area booked stands at 25.21 lakh square feet. Tata Motors will also be in focus, and this is on the back of price hikes that the company has undertaken. They've announced price increase for commercial vehicles ahead of B6 Phase 2 emission norms. They will be increasing prices by about 5% on its commercial vehicles beginning 1st of April 2023. Zydus Life Sciences, on the back of approval that they have received from US FDA. Indian Oil Corporation will also be in focus. They've received in-principle approval to carry out project activities, including preparation of detailed feasibility report for setting up Paradeep petrochemical complex in Odisha, and this estimated cost of this project stands at about 61,000 odd crores. And lastly, Tata Power in focus, and that is because Tata Power Renewable Energy Limited, which is a wholly owned subsidiary of Tata Power, has secured letter of award to set up 200 megawatt solar PV project in Maharashtra. So on the back of this order win, Tata Power will also be in focus today.
All right, then we will watch out for all the stocks in focus. Thank you for that, Ashesha. But there's another stock that will be in focus today, and that's Greaves Cotton that will be in focus as the promoter has bought shares from the open market. And Vinny is joining in with more details on that. Over to you, Vinny.
Absolutely. We are keeping an eye out on Greaves Cotton, and obviously, like we're talking about the promoters buying from the open market, and this has just happened on the last couple of days. When you look at it, there's increased buying coming in from the promoters just before actually the closing of the date in terms of buying shares just before in terms of the earnings come out. So now look at the buying that has come in. 21st March, the promoters have bought 79 lakh shares. 17th March, also they've bought 1 lakh shares. This is all through open market. While 16th March, also they've bought 20 lakh shares. Now, as of December 2022, they were holding 55.54% stake. Post this continuous buying that we've seen coming in, they have bought 55.59% stake in the company. Now, that's the overall as of now. They're holding a small percentage increase, but not very often that we see promoters buying from the open market, and this is continuous buying that we've seen coming in the last 1 week. In terms of the price movement, also look at it in the last 1 week, the stock is up almost 2% as well. Let's look at the key triggers that come in for Greaves Cotton in terms of, obviously, there's going to be the main trigger is the transformational strategy that they have. There is a three-pronged strategy in terms of across their mobility space. Greaves Electric Mobility involved in selling E2W as well as electric two-wheeler, three-wheeler space as well. So that is a factor that we are keeping an eye out on. They're focusing on expanding that electric two-wheeler space as well, offerings over there in terms of various price points. That is going to be a key trigger for the company, as well as adequate capacity is in place to meet the demand as well. So these are going to be the key triggers that we'll be watching out for Greaves Cotton as well.
Right, Greaves Cotton in focus on the back of that. Thanks for all of those updates, Vinny. But we'll quickly move on. Zoom in on the banking and NBFC sector. SBI has met with Motilal Oswal, and on the back of that, Motilal Oswal, of course, highlights their understanding of what the SBI management expects going forward. First off, to quell any negativity, the SBI management reiterated that they don't see significant challenges to the Indian banking system at the moment. So that's a key positive. With regard to growth, they believe manufacturing, export, renewables, batteries and EV segments are likely to be growth drivers for the economy going into FY24. They expect loan growth to moderate. Currently, loan growth around 16 to 17%, expected to moderate towards that 14 to 16% band. So that's where SBI expects loan growth to be at. They expect margin to continue to expand for them. So that's definitely a big positive. And of course, along with the RBI also looking at the repo, start of April will be the RBI meet as well. And we have the FOMC meet this week as well. The repo and the manner in which that moves will also drive margins going forward. But that's a big positive on the back of a very tepid deposit growth number that they've been clocking. Moving quickly on, credit costs expected to remain benign in this increasing interest rate environment, and SBI remains committed to delivering an ROA of 1% plus. So that's the large positives and the large takeaways from the management meet with SBI. Let's quickly move on. Manappuram also met with analysts, and what they've guided for is a loan growth of 20% and ROE of 20% in FY24. Solid in terms of their guidance going into FY24. They believe that non-gold business is going to drive the advances growth into FY24, and they believe the standalone gold loan book is expected to grow only in the 6 to 8% band on a year-on-year basis in FY24. But in FY25, it will grow in the 10 to 12% band. That's what they are guiding for. Gold loan yields, they believe, are sustainable within the guided range of 21 to 22%. And VP Nand Kumar, this is a key, does not intend to retire at the end of his term in April 2024. And he'll be seeking an extension going into April 2024. Also, there are no plans to sell stake in Ashirvad Microfinance. In fact, they're looking at fresh equity infusion from financial investors. That's the take coming in from Manappuram.
All right, thank you for the details, Harsh. And with that, we're completely out of time on this one. Thank you so much for tuning in. The markets will take the action forward.